We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Shawn Winslow of Greenbriar Capital Group. Now, Shawn and I did a podcast on his show, I don't know, maybe a month or 6 weeks ago, and it really got a lot of traction. And so I said, man, we've got to get you on this show because my audience just needs to hear what he has to say. He's got so many good, valid, solid points about just procuring relationships with brokers and making sure that you stay on their list when it comes time for them to shop the deal, that they give you a call, they give you a chance. So anyway, without further ado, Shawn, how are you today, sir?
Hey, Casey, I'm doing great. Thank you so much for having me on, man. It's a pleasure.
Absolutely. It's always fun to connect and talk and you know, kick the tires on the capital raising business, and also to talk a little bit more because broker relationships, you know, it's kind of like the buying tires of the business, if you will. It's the stuff that doesn't, a lot of times it doesn't, like, noticeable yield as you move along is difficult. But the thing is that, like I said, like buying tires, it's very unfulfilling, and it can be very unfulfilling to sit all afternoon and make calls to brokers that you've talked to before and to get absolutely nowhere. So, but how do you maintain those relationships? But first of all, I want you to tell the listeners a little bit about yourself, where you come from, how you got to where you are, and then we'll jump into all of the guts of the broker stuff.
Yeah. So my professional background kind of, I guess, parlays into building relationships with brokers because that's essentially what I did in a different side of the business or a different industry. But I'll take you way back. Young kid, grew up in a family of entrepreneurs, so you think that would have been the destiny right out of the gate. But I feel like I even had my own, lawn care business, pushing, mowers and mowing lawns in the summer, and then I lived in the Northeast, so then in the winter, snow removal.
Yep.
But like most, you're just kind of conditioned by our society, and I ended up going to college, studying finance, and then going to work for Wall Street, corporate America. So did not at first follow the entrepreneurship path. And I worked for a large investment firm. At the time I left, it was one of the top 10 largest. They had about 1.7 trillion in assets under management, mutual funds, ETFs, smart beta, all that type of good stuff. But at the end of the day, I wasn't fulfilled, but two, from a kind of goals and morals just didn't align. I felt like that industry is more concerned with their own pocket than their investors and clients' pocket. And I just wanted to be there to help others grow wealth as well as grow my own. I feel like that's only fair, right?
Yeah. Oh, yeah.
So, and at the end of the day, it was more like I'm waking up and selling a product that I personally don't invest in, right?
Mm-hmm.
Personally don't use. So it just felt weird, and I knew I needed to make a change. And so I started thinking, what do I want to do with my life? And then after talking to some mentors, they were saying, well, first you should figure out what you want your life to be, and then build, your business or your career around that. And so then I started to think about what I like. Obviously I love my family, love my friends, love to travel. I'm a big skier. So I love being able to have that flexible schedule.
Sure.
And then also those things I like to do cost money, right? So it's not like I can just do this for free. So I needed to come up with a way to also make money. And I studied finance because I love finance. So I love numbers, love investing. And then I looked at other successful people that I'd come across both in my career and personally. I can, looking back on when I was a kid, entrepreneurs, and then as a professional, friends and other professionals that were successful. And the ones that had the two things that I were looking for, which is time and money, they all did the same thing. They were all in real estate, whether it was multifamily, commercial, whatever asset class, but they were in real estate.
Yep.
And then it brought me back to a conversation I had with my grandfather, who was a successful entrepreneur. And one thing he said always resonated with me, and that is that he was very successful in his business and the stock market, but his real estate was going to pay for his retirement. And so
Pretty
that
much, it's
just
pretty
hit again.
sobering thought, isn't it? I mean, where it's pretty sober when you hear something like that.
Yeah.
It's like,
Yeah.
hmm,
And
because
it made sense, right? It was like
yeah,
he had done well enough and saved enough that he didn't need the real estate, but it was the fact that he could then take that money and donate it to the causes he wanted, and then the real estate still paid for his life. That was when it hit me that, to me, that's what I want to do with
sure,
my life, right? Because I
sure.
want to be able to make the world a better place, and I want to have the time and the freedom to do so. So I decided I need to get out of traditional finance, and so I took a real estate finance program at a university in Boston. Did a night program while I was still working, and then I started to think, okay, so now how am I going to transition? I started applying to jobs at private equity real estate shops, and then I kind of like hit myself on the head again. I'm like, Shawn, what are you doing?
Yeah,
You want to get out of the corporate world. Why are you trying to do this again? And then while that was happening, I kind of stumbled on syndications. I'd never heard of the term. I'd been in finance for, at that point, I don't know, 8 years.
yep,
I'd never heard of syndication. And I was talking to a guy who's in the same real estate program I was. He was in syndications. He was trying to get out, which is kind of funny. And so he told me about syndication. I was like, "Nah, I want to get into that." But I knew I couldn't just get into it and quit my job at the same time financially, right?
yep,
That wouldn't work, but I couldn't do both because I was licensed under FINRA. So that would be a conflict of interest. I couldn't, raise money for my company and then raise money for the employer I was working for.
yep,
So I started building a portfolio of small multis, got up to about 25 doors, which gave me enough, kind of cushion to then quit and go after syndications. And so now we've syndicated strictly multifamily, over 400 units of multifamily, and over, what are we at? 474. No, excuse, yeah, 474 student housing beds,
oh wow.
and that's where
Now,
we're at right now.
so we're gonna kind of take this in pieces and parts here. There's just some questions that I know I've got. So when you first started, Ray, and again, our audience is capital raisers and syndicators and real estate professionals in general that are wanting to learn more about both of those parts of the business. But what? So let's talk about the capital raising side first. 506B or 506C?
So far, just 506B.
Okay, so friends and family, people you already had a good relationship with, and was any of that brought along with you from the corporate world, or are they basically just people that are within your circle of friends and family and whatnot?
A little bit of both. But I'll be honest and frank with you that I thought I was going to be able to pull more from my professional network at first. And just because a lot of successful people that, you think they're savvy when it comes to investments. But going back to the whole thing I said before about being conditioned, just like being conditioned to go to school, do good well there, and get a good corporate job, people are also conditioned to invest traditionally,
Sure,
stocks, bonds, mutual funds, 401ks, IRAs. And so that's what my colleagues were doing, and most likely still are doing for the most part. I've got some that have wanted to invest with me or have invested with me, but for the most part, they traditionally invest and they haven't seen the light either. So I wasn't able to pull as much as I thought I would. So at the beginning, it was mostly friends, family, referrals, and then it's um, grown since there, and it's
sure,
making strategic partnerships with people like yourself, who then can partner and we can take down deals together,
sure.
and that's where we're kind of at now.
Do you ever feel like, so at least the experience that I've had, I didn't ever work in, say, corporate America, if you will, but some of the experience that I've had with folks that have that like, it's almost like there's a certain degree of they don't want to let go of control, if that makes sense. Like some of those guys who are in corp, like there's a reason why they're at the top looking or handling people's money. It's because they like being in control. And I know that's a big reason why a lot of people don't step out of that, especially if they're close to it and career wise, they just don't come out of that and say, hey, yeah, let's go. I'll give you, here's the money, go invest it. It just seems like some of that plays into it. Maybe it plays into it more than what we realize or more than what we think.
Yeah, I think it definitely has to do with the control aspect. And then it also comes from, it's hard to change a mindset
Yeah.
because then you got to admit to yourself that you were wrong. And that's tough to do. Like, I don't care who you are. It's tough for me to do that. And I feel like people are just so conditioned, which makes sense. The banks have a lot of money, investment firms have a lot of money to put out that marketing to get us conditioned to invest a certain way. Right.
Yep.
And so I feel like one, yeah, they don't have the control. And then two, it's that it's going against everything that they believe in. And it's hard for them to escape that.
Yeah. 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 And and again, it comes back to what, and to me, it seems like I was talking to somebody the other day about this, where us as real estate syndicators and capital raisers, it's like every time we turn around, we have to say, hey, there's risk in this. Hey, there's risk in this. Hey, do you know there's risk in this? Hey, do you know there's risk in this? And then and at the end of the day, my feeling towards that. Now, I'm not saying I don't want to disclose by any stretch, but what I'm getting at is at the end of the day, our investment is built on dirt. Okay, the dirt underneath the asset. If we don't have anything else, if everything that is stick and material wise goes away from that property, we have the dirt, we have the lot, we have the building area that it was sitting on. If, like, let's just say, God forbid, a big bottled water company that you hold stock in goes under. I mean, theoretically, they're going to have some assets, but in theory, I mean, this just seems like there's a lot more risk in owning and trading and that kind of stuff. But those folks have like lobbied or been around long enough to where they don't have to wave the risk flag everywhere they go and tattoo it on their forehead and all that kind of stuff. You know what I'm saying?
Yeah, yeah. No, I agree. I agree with you, and it's interesting to see, and because you do get that pushback at first, right? That this is risky, which to us makes no sense because historically it's significantly less risky than traditional investments, and that's proven by historical data.
Yeah, I mean, show me a graph of any real estate I mean, we go through this all the time on the show. Show me a graph of any real estate trends you want to show me. I don't care what metric you want to put a graph to. There's like a better than not chance that it's going north almost all the time, at least in general trend. And show me a graph of, now I guess the same argument could be made for the stock market, but the nuanced differences that you have in companies where one company does better because another one does worse, the fluctuations that they have that way, it just, to me, there has been bad days in real estate, but there's never been like bad centuries.
Right. And even if we look at the bad days, like let's look at '08, right?
Yeah.
It's a housing crisis, right? That was focused on real estate, but let's look at the numbers.
Yep.
The S&P 500 was down about 30%. And multifamily was only down 6%.
Yep.
It's a housing crisis and it's still outperformed.
Yep.
And then if we look at the amount of down days the market has been down, say the stock market, it's real estate's been down 300 times fewer.
Yep.
And that's over the last, almost 100 years. So yeah, like I said, the facts tell the story, right?
Well, and that goes back to my listeners. I'm sure they've heard me tell this before, but to show me a single piece of property that you wouldn't buy right now today, sitting where you're at with virtually without most likely even having to go look at it at the same price that it was in 2006, the same value it was in 2006.
Oh
And
yeah.
we've been through, I mean, we're only talking about a short little smidgen of time when you're talking about 16 years in the big scheme of things. But, what if, and then you think about some of the stocks that have, or some of the companies that have absolutely had their throats cut since '06. I mean, it's just, to me, I don't know. I guess, like you said, the conditioning goes much further than just the way we're conditioned. It goes into like what's ingrained in society. And it's so anyway, but we could talk about that all day long, and the differences, and why somebody should invest in real estate. But so let's talk a little bit about your deals. You said how many doors total? Like 400 multifamily, and then two something student
Uh,
housing.
470 to be exact. I think it's last time I checked, 474 student housing beds.
Okay.
Yeah, and so over 400 multifamily.
And why the student housing? That's something that we don't touch on a lot on my show, just because we don't, I don't know that we've really got into it. But what's the student housing, and what's the potential upside that you see there?
Yeah. So first is diversification play within essentially the same asset class. Like to me, it's the same except the client is different, right? It's instead of being anyone can come and rent your spot. It's for a student,
Yeah,
and I look at it that it's diversifying. And I look back at when I was in school. I was in school in '08, and I was actually having this conversation the other day with someone that I even though I saw it in the news that there was a financial crisis, I didn't know.
yeah,
Like when you're in school, you're insulated. If you're lucky enough to have your parents be able to pay your education, they've been planning that for like almost 2 decades, right?
yeah,
So the money's already there. And if they've been smart with their own personal finances, then you're still going to go to school no matter what the situation is. I can't think of one friend or one acquaintance at school that had to leave because of financial issues when I was there
sure,
in '08. Um, so, and then again with COVID, yeah, there was, some pullback in terms of living on campus, but school still chugged along, right? Even if it
yep,
was virtual, and you sign these leases for 12 months and they're co-signed by parents. So
yep,
that's huge. You're going to get that money. So to me, it's a great diversification play. And it's backed by a major institution. So you do your due diligence on the institution too, because you want to make sure
oh
that's
yeah,
growing, right?
oh
Like that their admissions aren't going down, that they're growing, that
yeah,
they're investing back in the institution, that it's a solid institution. And then from there, then you say, okay, what's the location to the um to the school? Like the last one we acquired was about zero point 0.3 miles to the heart of campus, or actually, excuse me, zero point 0.2 miles from the heart of campus. So walking distance. It also had a bus route at the entrance of the property, and it was the closest off-school housing to the campus, and it was developed around it, so there couldn't be anything built closer. So
sure,
those things you look at, and then in terms of the major difference is leasing, right?
yep,
So you talk about pre-leasing in multifamily, but you talk about it a lot more in student because in student housing, your all your leases are the same. They're all from the start of school, so either August or September, all the way 12 months later, right?
sure.
So it's really important to get your leasing um, done before school starts, right? It's not like
Yeah, because
multifamily
you're not
where
going to lease. You're not going to find somebody that wants to move in October necessarily. I mean, maybe.
yeah, unless someone transfers, but that's only like a
Yeah,
handful or less, right?
yeah,
So it's very important to start leasing, anywhere from January to February, really starting to ramp it up, and then the spring really ramping it up, and make sure you're almost 100% pre-leased by beginning to midsummer. And so that's really important.
yeah. And I, of course, I look back and think back to when I was in college, and the same thing. And let's be honest, college students probably aren't the easiest on property. I wouldn't think. Um, you know, you, your glass recycle bin is probably full a lot, I'd say, if you know what I mean. And so,
So yeah, it is different than if you own like a a duplex, 4 unit, 6 unit, then yeah, I would never be in that type of student for the most part because there's no one,
So
there's no
we
staff on property. So we're buying like a big complex, like it could be a multifamily complex, with concierge, with a pool, with a
sure.
fitness center, study lounge, and they're usually, common area, and then 3 to 4 units off the common area, and that's or 3 to 4 bedrooms off
So you're
of
talking
the
about like a
common
living
area.
area, kitchen, and then a
Yeah,
bed, bath, bed, bath, bed, bath, bed, bath, or some
yeah.
combination thereof. Okay.
So it's like a complex. So they're not really throwing like, yeah, they'll have people over, but they're not throwing like big parties. Staying up too late. They can get well, they can stay up late, but they just can't be like absurdly loud because they'll get noise complaints.
Sure.
So it's not that type of student housing where you're having kids run through the drywall or anything like that.
Or the same
But
guy
yeah,
passes out in the same spot and pukes every time. I
yeah,
mean,
exactly.
yeah,
But if you furnish it, it definitely, which a lot of students housings do,
furnish
there
the
definitely
common
is.
area.
No, sometimes even the rooms, like
Okay.
there'll be beds in, like a dresser.
Well, essentially, because it comes there. There's a little bit of me that is wondering because automatically one of the first assessments that I do when looking at something is competition.
Yep.
And while I love the fact that you have a fitness center and a pool and some other things that you could or even add those to a place if you didn't have it, but would is the number one competition not the school itself? Um, I mean, are you talking
It all
about
depends.
being able do you go in and look at the cost of dorm room housing and meal plans and stuff and try to fall somewhere in that like area?
It all depends on the university because some institutions are like pro on campus
Yeah.
housing and
Yep.
they emphasize that. And then there's some that are just completely hands off and either don't have any at all or have very little and they
Okay.
prefer to keep it that way. So we want to invest in those type of institutions
Because yeah,
where
it wouldn't
they're
make a lot of
push.
sense to go and be competing with the university itself if they've got room to house 60% of their school body or whatever. I mean, I don't know what the figures would be. I guess I'm just saying that if they've got room or vacancies in the dorms, it would you definitely would have to look at what's going on there. But man, that's
Yeah.
interesting. And like I said, we don't get a lot of student housing stuff here. I think we may have talked about it once, maybe twice before, and but that's interesting. And is Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show. Now, the best, I think, am I right or wrong when I say there's a special Fannie or Freddie loan specifically designed for student housing?
Yeah, you're correct, but and they're it's really hard to use right now though. So
Okay.
they're not, they hadn't been really pro student since the pandemic, which is kind of funny because now you're seeing people go back to school like in droves and our pre-leasing is crazy. We're getting rent growth at our projected, you know, renovation numbers. So
Sure.
it's been pretty wild. But right now you got to use a lot of we've been using a lot of local banks, credit unions, regional banks to finance these
Just
because
regular, typical, everyday
yeah,
financing.
because they know the market and they love the asset class. They love that institution that is backed by that, that university that's backing that. So
Sure.
so they give the best terms and rates.
Now, how many different markets are you currently in student housing?
Um, Two as of now, North Carolina and Virginia.
Okay. As long as you're not at Duke, I'm cool with that.
Yeah,
So
we're not at Duke. No.
awesome. That's what I say. We here in Kentucky are anti
That makes sense.
Blue Devil. So, no, it's all good, man. Everybody somewhere, as long as you're making money, that's all that matters to me.
Right.
And so when we're looking at, I guess, is that part of a fund when you say it's a diversification play, or are you looking for somebody that's just specifically coming to you and says, "Hey, I'm looking to diversify. What do you have?" And then you say, "Hey, yeah, we've got this," and then how does that play into your overall thoughts of adding that with whatever else you've got going on with multifamily?
Yeah, yeah. So the latter, we currently don't have a fund, so it's diversification
Okay,
from opportunities, and personally diversification for me too, because I invest, in
sure.
our deals as well. So I like the diversification, um, and it just makes sense to me. Back from the story I told you when I went to school, it just seems like at this point, there's always chatter of like, school's going downhill, it's not needed, and I love having that conversation too, but at the present, it's people are still going right,
Yep.
and I think it's a great diversification, and it's always one of those things. It's like you were saying at the beginning, it's still real estate, right? Even if there was a drawback, there's still other things you can use it for. But the caveat to that is we're doing due diligence on these institutions to know that they're solid
Yeah.
and they're backing what
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 would
we're doing.
just real quick, can you give us an example of what a specific due diligent item on the school itself would be?
Yeah. So we want to make sure the trend line of admissions is going up, not decreasing. We want to see that the institution has been reinvesting in itself and continue and wants to do so. Like one of our recent acquisitions, the school is investing $100 million into the institution and many different facets. But like that to us is like, all right, they definitely see a future in their school. They're
Yes.
investing it in the right stuff, and the admissions have been going up. We like Division One. Um, we like there to
Now, is that
be
stuff that is that are those metrics that the school just give you? Just like call the office and say, "Hey, can I get?"
a
I
lot
need.
of it's public.
Oh, it is. Okay.
So yeah, it's just a lot of research, and we like to see that it's it depends. Like you could be focused on a school that maybe has one concentration in terms of academia, but
Hmm.
we like to see that it has a wide range of of different types of degrees, and because for us that's again diversification. It's not
Sure.
solely
Sure.
focused on one industry, so we look at that as well.
Well, I mean, and it's just interesting to hear because we're so used to uh, beating our heads against the wall underwriting multifamily properties. When you underwrite 1,000 of them, and sometimes the numbers or the lines get blurry, and you
Yeah,
fall asleep looking at it. But it's kind of interesting to see that, hey, there's other plays here that you can make where other outside factors are I don't know, that's I guess maybe the nerd in me. I don't know that I like seeing things and seeing how the impact of certain factors for instance the schools um registration, or what did you call it,
admissions
admissions.
rate is going
And
up.
yeah,
Yeah,
I mean that stuff's to me that's interesting to see those trends, and then see how that kind of aligns with even rent amounts. Like maybe you're able to find past rental charts and stuff where you can see how admissions affected rent levels, and for instance if a school's investing like they're investing, the one says they're doing $100 million expansion. I mean that's although $100 million doesn't quite get you what it used to, but
yeah,
I
it's
guess. But
true.
so talk a little bit real quick before we run out of time here. Let's talk a little bit about your multifamily stuff
Yeah,
and what you got going on there. So how many units were the multifamily?
just over 400.
Okay, and what markets or what areas are those, and then and possibly why?
Yeah, Georgia and the Carolinas.
Okay.
Um, I just love the Sun Belt. As you know, it's just a lot of
Yep.
people are moving there. Not just people, but jobs. Businesses are moving their headquarters, opening up new plants, new offices.
Yep.
Income growth is strong there. Household value obviously strong everywhere, but it's really strong there. We just love it from a demographic standpoint, and it doesn't seem to be a fad in terms of The migration, it seems to be really sticky.
I always say the Sun Belt is like the average on a graph. No matter what you do, it always comes back to that line. I
Right.
mean, right? I mean, it just seems nobody, people might leave, but they always come back because, I mean, who wants to freeze to death all the time? I mean, or who wants to burn up all the time? I mean, but anyway,
I know.
so
I know.
yes.
I ask myself that every winter. Even though I love skiing, I still ask myself that every winter.
Yeah, I'm in the same boat. I'm like, well, are we all crazy for not? Why don't we all live in Florida? I mean,
Yeah.
what's the deal here? It just seems like we should all live there because it's or but anyway. So, all right. So I'm going to ask you a couple of questions. These are the same questions that we ask every guest that comes on the show. There's no right or wrong answer. But what is the best book that you have recently read or are currently reading?
Ooh, that's a good one. Um, well, the one I just finished, have it right here. Uh, Dave's Way, the
Oh
found
man,
the founder of
yes.
Wendy's. It's a phenomenal book.
He was,
Um,
man, that guy, and look at the branding. He's almost, and if I'm not mistaken, I want to say, did him and Colonel Sanders have some type of a relationship
yeah.
at some point? That's what I thought.
Yep. Yep. Before he created Wendy's, he opened up several Kentucky
Yeah,
Fried Chicken
and that's why they
locations.
always said why Wendy's chicken nuggets were just so just fabulous
Yeah.
was because of that. But no, man, he was, and just, and look at, I mean, the brand, the guy is the brand. It's all, it's a beautiful thing. He was, yeah, unreal. So,
And just
um,
a brilliant mind, marketing mind, businessman. Yeah, I would recommend it to anyone.
because I've oftentimes thought, I'm like, man, those square cheeseburgers are just like that's like something that's just right up my alley on just something maybe that may not have made a lot of sense to somebody else, but then just stuck out like a just come eat
Well,
my square cheeseburgers.
you know why he did it? You learn this in the book. It, it ended up being a marketing thing too, but he did it because he felt there was one a lot of waste by if you just cut it in a square, there's less waste than making a circle, right? Because
Okay.
more surface area, right? And then you could fit more on the grill because it's
Ah,
like square, So it had a purpose from a
more
business
grill.
sense,
Oh my
um,
gosh, using the
and from an
grill.
operation sense.
That's
Yeah,
unbelievable. Man,
smart guy.
yeah, I mean, you just one of the I think a lot of people overlook him because those fast food wars were they were just basically taken over by the McDonald's. I mean, and then when you go back and you look, and then when Kentucky Fried Chicken was taking off, and he was opening those. Yeah, and I'm glad you said it because I couldn't remember exactly what the relationship with him and Colonel Sanders was, but that was, yeah. I mean, it's just unreal, unreal. And then Wendy was a completely fabricated, or was it his daughter or something like that,
So
right?
it's his daughter. That's not her name though. It was one of his other children couldn't pronounce. I can't remember her actual name, but couldn't pronounce her actual name. So just when they were kids, so called her Wendy as a
Oh,
nickname.
and there you
So that's why
go.
he used that.
Man, that's what an interesting story. Yeah, everybody run out and read that because that'll give you an entrepreneurial my just that'll give
Crash
you,
course for sure.
yeah, a crash course into somebody that had one of the most brilliant entrepreneurial minds of really our time. And I don't even know what year he passed away. It hadn't been that long ago, has it? Did
Yeah, it was when was it? Like, yeah, it wasn't too long. Early to mid 2000s,
yeah,
I want to say.
because I couldn't remember because I think, yeah. Anyway,
He was young. I think he was only in his 60s, I think, or
oh
maybe
wow, man,
70s.
that is young.
Might have been 70s.
My gosh. All right. So, what is a dream vacation you have taken or hope to take?
Ooh, a dream vacation. Um, I would say the first half of the vacation would be skiing in either Switzerland or Austria, maybe
Yeah.
both,
Yeah.
and then ending it in Italy,
Awesome,
um,
man. That's
on the
great.
water. Yeah,
Yeah. Just going straight south to down to the boot, or going into
yeah,
the,
or to
or going
Sicily
up
or
into
something. Yeah,
Sicily. Yeah. Yeah, man. That's awesome. My wife and I, we were in Italy a couple weeks ago. Well, a couple months ago now. We were taking off, and I remember looking over, man, those Swiss Alps were just, I mean, that's like a sight that could never get old. And
I know,
the
right?
airplane view of the Swiss Alps was just unbelievable. So, well, all right, Sean. Well, listen, how can they use it? How can the listeners, if they are interested in learning more about you, your company, or have heard something they want to expand on, or maybe want to get some questions answered about, what's the best way for them to reach out to you?
Yeah, you can find me on Instagram. Handles Shawn Wins. That's where I'm the most active. Obviously, you can find me on LinkedIn too. That's probably the second most active place I'm at. Just search Shawn Winslow. And then my podcast is Multifamily Money. So you can listen to me there as well. And I don't know if you want me to leave. We didn't really get into how I acquired those units, but if anyone wanted to know how I built these broker relationships, I do have a resource that I can, leave for them as well.
Awesome. Yeah, leave it. Well, how do they get the resource?
Yeah, so it's just simply texting deal flow. So deal space flow. I'm not going to mass market at you. All you're going to do is just get an email with this resource, and that's it. So you text that to 415-528-7403. Again, that's text deal flow to 415-528-7403. I just break down how I've built these relationships with commercial brokers, how I fostered them, and how they have brought me some awesome deals.
Sure. Awesome, man. Well, Shawn, thank you so much for taking the time, and thanks for offering to give that out to the folks. Hit Shawn up. I mean, I can guarantee you that we covered about 1/1,000,000th of what this man knows about everything he just told us. So hit him up, go listen to his podcast. One more time, the podcast name?
Yeah. Multifamily Money.
Awesome. Awesome. Shawn, thanks again, sir. I hope everybody has a wonderful rest of the day.
Casey, thank you so much for having me. I appreciate it.
Absolutely.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.